once that guidance is issued, but we wanted to get you a good head start on the things you need to think about to maximize what your loan forgiveness will be. And I'm sorry, I can't see the PowerPoint, but I've got a hard copy, so I'm just going to move forward. And if you could do the second slide with the question.
I just want to verify that people can in fact see the screen. My computer had a little glitch there.
I can see it now, Ann.
People are answering the poll, so.
Okay, yeah, I have to be honest, I can't see it at the moment. I'm not quite sure why.
And I could see it and I was able to respond. This is Robert Shenton,
Okay, thank you.
other presenter.
And mine is showing Zoom.
So I think part of the problem is people keep launching their videos. So we're going to ask participants to leave video off. Looks like we have about 80% of the participants have responded to the poll. So
Okay.
here's the results. We have.
Wow, yeah, that looks pretty good. Looks like only 3% have not applied. 13% have applied but not been approved. 46% have been approved but have not yet received the funds. And 38% have already received their funds. Well, that's good to know. I think based on that, I mean, I'll quickly sort of walk through the requirements for the loan, but it looks like for the most part we're already in process for getting a loan, and or you already have the funds that have been dispersed to you. So just a general overview: how much can you borrow from this program? 2.5 times your average monthly payroll costs for the year before the loan is made, including additional if you already have an SBA loan balance, up to a maximum of 10 million. What are the allowable uses? And if you could go to that slide. The allowable uses are payroll support, which includes salaries, wages, paid sick leave or medical leave, unless you're seeking a tax credit under the Paid Sick Leave Act for specific COVID-19 paid sick leave, and insurance premiums like that you pay for benefits. The SBA's guidance, which it issued on April 15th, makes clear that they're taking the position that with respect to allowable uses, 75% must be allocated towards the payroll support. I have no reason to believe that that's not going to be a hard and fast rule for this program based upon the April 15th guidance. So 75% of the loan proceeds have to go to payroll support. 25% can be used for the other uses: payment of interest on mortgage obligations, rent, or utility payments. So that's sort of the breakdown. And if you could go to the next slide. Okay, on the loan terms, pretty simple. 1% interest, loan duration 2 years, no prepayment fees or payment deferment for 6 months. So interest is going to accrue for the first 6 months, but payment will not be required, even if you need to pay back all of it or a percentage of it after loan forgiveness. And if you could go to the loan term slide, the next slide. With the borrower and lender fees waived. And frankly, given where we're at, you could just go to the next slide. Source of capital, loans are 100% guaranteed from the federal government. Obviously, you're getting them through your lender. If you could go to the next slide, Ann.
Excuse me, sorry to interrupt, but I just want to let everyone know that the chat feature has been disabled, so we're not able to enter notes.
Okay.
That has been resolved.
Okay, great. So I don't know if everyone heard that, but it looks like for a period of time the chat was not working, but I guess it's working now. Just to get back to it, really who can be approved for the loan. If you've been in operation from February 15, 2020, you have employees and you're presumed to be affected by COVID-19. If you go to the next slide, obviously the next slide is you have to have no more than 500 employees.
I have the next slide is a poll.
Okay, yeah, go ahead and go to that. And if you could give the question, I'm still not seeing the PowerPoint, but. Yes, so the poll question, are you expecting 100% forgiveness of your PPP loan? So if we could answer that.
Yeah, the votes are coming in. We've got about 70% participation right now.
Perfect.
Morris, can you see the chat?
I cannot see the chat.
So we have a few questions while the poll's coming in.
Sure.
The first one says allowable uses just means forgivable portion, correct?
No. That's the forgivable portion is also going to be based upon payroll costs and obviously the mortgage, utilities, rent payments. But if you in the April 15th guidance, the SBA, and I can send the guidance around to everyone who's attending because it's pretty useful, although they're going to update it. But they asked two separate questions. Can my loan be forgiven in whole or in part? And that's when they talk about the 75-25 rule and the uses of the loan. There's a separate question R, how can PPP loans be used? And that's a separate question from the loan forgiveness. And when they answer that question, they say that the proceeds are to be used for payroll costs, benefits, mortgage interest payments, rent payments, utility payments, and they repeat their 75% rule that they used when they were talking about loan forgiveness. So at least under the current regulatory environment, as I read that regulation, the loan proceeds need to be used for the payroll costs for the same reasons that the loan forgiveness will be applied to. So it's not that if you get the money, you can use it for an unrelated purpose and just not have to worry and just take the position, I'm going to use it for an unrelated purpose and I'll just pay the interest on it. And, you know, we are still waiting further guidance from the SBA, but based upon what they released this week, the loans can only be used for the payroll costs, rent payments, utility payments, and those uses are subject to the 75-25 rule, which means 75 should be used for payroll costs, 25 for those other enumerated costs.
Would the difference then be the time period, Morris, that the forgiveness is within that 8-week period? And if it wasn't 100% forgiven, the remaining portion could be used outside the 8-week period, but for those purposes?
Yeah, I mean, I think, and again, you know, that might be changing, you know, when the SBA sort of follows up with some additional guidance, but I mean, I think that's what we're looking at this point. And that's kind of how we have to think about it. So I'm looking at the questions, and Ann, do we have any more questions in the chat?
There are a good number of questions in there. My guess is that a portion of them will be answered in the course of your presentation.
Okay.
So
Okay. Yeah. And so I'll looking at the result of the question, it looks like 59% are looking at maybe 100% forgiveness. 41% are looking at less than that. So let's talk about that now, because that's this is really in a state of flux, and you know, Robert and I are going to be talking about what the current state of the law is, and just so we're clear, you know, we're going to be waiting on guidance from the SBA to answer some of the questions that we all have at this point. With respect to the loan forgiveness, what costs are eligible for that? As mentioned before, payroll costs, excluding compensation above 100,000. If someone makes over 100,000, you can only include that payroll cost up to 100,000. And then the interest payments on a mortgage incurred prior to February 15th, 2020. Payment of rent on any lease in force prior to February 15, 2020, and payment on any utility for which service began before February 15, 2020. Those are the eligible costs for the 8-week loan forgiveness period. And Ann, if you could go to the next slide. Yeah, the next slide talks about the rent and the utility. And again, this is subject to that 75-25 rule. For loan forgiveness, the payroll costs need to be 75%, the other costs 25%. If you get to the next slide, is limits and exceptions. The first limit is obviously that the amount you seek forgiveness from can't exceed the principal balance of the loan. The more important ones deal with headcount of employees and reduction in salary and wages of employees. So, and I have to say, these are the calculations and the guidance on this currently, frankly, need a lot of work. And we all need to have a better idea of how this is going to work. But essentially, to run through how to look at the full-time equivalent headcount, the law gives you a choice of 2 periods to use to establish what your average headcount is. One period is 2/15/2019 through 6/30/2019. The other period you can use is January 1st of this year through the end of February, 2/29/20. You have the choice of using what your average headcount was during those 2 periods to compare to your average headcount during the next 8 weeks, the date you get the loan until the end of that 8-week period. So those are your two options, those two time periods, and you should look at those and see what during which period your average head count was lower, because that will make it a lower bar for you to meet to get full forgiveness. The other question is, what's a full-time equivalent employee? We are assuming that that's going to have the same meaning that it has for Form 1094, 1095 purposes, i.e. 30 hours a week, that they're going to take the position that a full-time equivalent is someone working at least 30 hours a week. And if you have, for example, 2 part-time employees working 15 hours a week, then they count as 1 full-time equivalent employee. Again, that's not clear at this point, but that's what we're going to assume. And that's what most of the guidance is assuming as well. So the way it's going to work is they're going to just roughly compare what your average headcount was during the either of the periods that you can use to compare to the 8-week period. If let's say you have 100 employees in the comparator period, 100 employees in the 8 weeks. But let's say in the next 8 weeks, you only have 90 employees. So you've got 100 employees in the comparator and 90 in the 8-week period. Well, then essentially you're going to get a 10% reduction in the loan forgiveness amount. So that's how the headcount works. The other aspect of it is salary and wages. If there's more than a 25% reduction in the amount that you are paying in salary and wages, then that's going to reduce your forgiveness. This is also in a real state of flux, because what the law currently says is that they're going to compare the amount employees received during the 8-week forgiveness period from the date of the loan 8 weeks later to what the salary and wages were during the last full quarter, which would be, the last full quarter at this point of 2019. Obviously, the problem with that, as the statute defines it, is you're comparing 8 weeks to 12 weeks. So we're hopeful that the SBA is going to provide further guidance on that, because at least as it currently stands, you could not get full forgiveness under the way this calculation currently reads, because you're going to be comparing 8 weeks to 12 weeks. So even if you're paying your employees the same amount of money, the amount you're going to pay them over the next 8 weeks is going to be less than what you paid them over the 12 weeks of the last full quarter. So again, this is a particular area we're really hoping the SBA can provide guidance and clarification for, because at this point, no one would get 100% forgiveness based upon that wage calculation unless they actually increase what they're paying their employees.
Morris, this is Robert. I want to just chime in for a second. What
Absolutely.
Morris just indicated in terms of that forgiveness, there is an inherent issue in the calculation right now. And that's why we asked this question, do you expect to get 100% forgiveness? Because as it's stated right now, it would be very difficult to get 100% forgiveness. So there is work in process to try and address that, but it will likely require congressional action. So again, that's being lobbied on because that was not considered to be the intent, but that's why it's very important that as we talk through the calculation for forgiveness and process for forgiveness to be aligned and understand as best as possible what your unique situation will be for getting that maximum forgiveness of the loan.
Correct. Yeah. No, I mean, it's and you know, there is the second wave of approval for this loan is in process in Congress. So hopefully they will address it shortly. The other exception I wanted to note, another way to sort of increase your loan forgiveness is, you know, if there's reduction in force that occurred between February 15, 2020 and within 30 days after enactment of the bill, if you rehire those employees, that will also be used to assist and increase the amount of loan forgiveness that you might be entitled to. And if you could jump to the next slide. So the way the process currently works is after the end of the 8-week period, you're going to file an application for loan forgiveness from your lender. And so one of the reasons, as Robert mentioned, to be prepared for this is to be prepared to have the documentation needed to establish what your payroll's been over the 8-week period, as well as, you know, how much you've paid in mortgage, rent, utilities. So the documentation you will need is your number of full-time employee equivalents, their pay rates, IRS payroll tax filings, and with respect to mortgage, rent, or utility, obviously canceled checks, any documents that prove how much you've paid for those allowable expenses. And again, you'll need to make sure, or to the extent possible, that you're going to, 75% is going to go to payroll, and 25%, at least 75% to payroll, and 25% for the other allowable expenses. And if you could jump to the next slide. And so then, and you'll also need a certification along with that application that's where you're certifying your documentation is true and correct. One thing I wanted to make clear too is if you're a part of a PEO, you know, you should make sure you save your payroll invoices, so you've got, you know, even if you don't have, I mean, I would ask from your PEO to get all the payroll information, but certainly you can maintain your payroll, the amount that you have paid to the PEO for payment of your employees, because, you know, you are a co-employee. So I just wanted to add that. And at this point, I'll change over, send it over to Robert to talk about the other issues, the accounting issues. And obviously we're available to answer any questions. This is uncertain times, and I'm sure we're going to learn more about this within the next 30 days. But you know, it's important that we keep our record keeping in, you know, up to date, and so we can make the case at the end of the 8 weeks to have our loan forgiveness to the maximum extent that you can. Robert?
Thank you, Morris. Appreciate it. One quick, we'll say housekeeping item. We are seeing the questions come in, and when I finish with these next 2 slides, we'll go to the questions. I'll read the questions, and then Morris and I will address those. So we will be able to get to your questions here shortly. As a CPA and such, good afternoon, happy Friday. We got to spend at least a little bit of time on accounting, and then the tax side. But more importantly, I think too, we want to give a little bit of business context to this as we think about this. So that, and if you would go to the, now that I have been approved and received the funds, thank you. So as represented in that first poll question, many of you have been approved and already received the funds. And just in terms of the characterization of what you've received, from an accounting, you've received cash and debt. So, you know, what a best practice is right now, because of the importance of maintaining good records on how you're using these funds, is to consider using a separate bank account for those funds received. And as we've mentioned, some of the issues that come with this 8-week coverage period, whether it's when does your payroll fall, or how do you pay commissions or bonuses if they're part of your structure. The one key thing we think to keep in mind here is cash basis. So this isn't accrual. This 8-week period is what do you pay? In other words, you've received funds and what do you pay, cash basis, over this 8-week tracking period. The tracking and documentation, as you saw in these filing requirement slides, is going to be essential. Stay current. In other words, don't wait for a month and then try to summarize it. At a minimum, we recommend that you should be tracking on a weekly basis of your payroll expenses and other eligible expenses, especially considering the idea of the 75-25% division between the payroll and other eligible expenses. So when you do get to the end of this 8-week period and the various certifications and decisions are made with regards to forgiveness of the loan, this liability for accounting purposes becomes other income. So it moves off your balance sheet, moves to your P&L, would be other income. And what we do understand right now is the idea that this loan forgiveness income would be represented as non-taxable income. So in other words, you're not paying tax on this other income. On the expense side, and again, this is still, we'll say, in the works, but right now the expenses you pay over that 8-week period would be treated no differently than your normal expenses in terms of their tax deductibility. So again, there is, I think, really the goal of this program was to get money to employers to pay people, keep them on the payroll, still get your deduction for tax purposes, but not create taxable income. And then the final thing I want to say about enforcement. So this will obviously be a work in process, but you know, certainly our read on this right now is that this is not intended to be a gotcha program. This is intended to be an employment and a help program, and that the enforcement coming through the banks, through the SBA, would be done on more of a macro level than a micro level. And what I mean by that is that as we talked about reporting compensation numbers, as we talked about reporting employment and FTE numbers, we're not seeing or thinking that people are going to be getting down into individual pay plan adjustments and so forth, but really be looking at more of those macro numbers for compensation, benefits, etc., as opposed to down to the micro level of individual pay plans and how those worked. Again, good judgment and reason is necessary in this, but we think it's important, you know, as you're trying to track and understand the eligible uses and forgiveness, that more than likely this is looked at on a macro and intent and spirit of the legislation as opposed to the micro level. And if you would go to the next poll question, please. So this poll question is really for you to think about next level down. Everybody understands that, you know, what the eligible expenses are as we talk about payroll and benefits and interest and rent, utilities, that type of thing. But this question, have you considered projects or activities outside the norm, is kind of going one level deeper. In other words, you've got this money now. How are you using it, and can you get a return internally on that money for business activities or projects that might be considered outside of normal operation? Go ahead and take a second and answer that question, please. How's it coming, Ann?
We're at 75% response rate.
Okay.
72
Let's get to
people have
80.
answered.
We'll get
All
to
right, you
80
can
and
do
then we can roll the results.
78, 79.
Almost there.
Come on. I think we're gonna hang at 79.
That's fine. Go ahead. Okay. So a relatively even split of yes at 54%, no at 46%. And you can go to the next slide. Every certainly company is unique in terms of how this current environment is impacting their business. I'm certainly aware of some manufacturers that are going full tilt right now in terms of kind of the industry that they serve and what they manufacture, and others that certainly have some excess capacity and or their business has certainly fallen. And so I would guess that we have a distribution of both of those on our webinar here today. So certainly your unique situation is important here. But one thing that's not part of this legislation is what are your people doing during this time period that they may be being paid by the PPP funds. And so what I think we wanted to do, not only, certainly in this call, but also as part of Manufacturing Works is that in using your people and their talents, especially if they're being underutilized at this point in time, and you've got PPP funds to use, is can you take a look at some of your products and processes in things that perhaps that you reimagine or reconfigure over this time frame. Are there projects that you've had that you've always wanted to do, but you've always said, we really don't have time or we can't pull people off their current objectives? Well, perhaps this allows some opportunity for that. Customer contact and reviews, I think all of us in terms of staying close to our customers, even in a remote type environment, has been important. But when we talk about we'll say good business, good customers versus maybe those that are not, this is a great time to be having kind of a overall review and understanding of those that are profitable work, profitable customers, and perhaps those that maybe aren't. And so, continuation and service reviews might be a good use of some time here. Training and development goes without saying. Workforce development, as we know, is a big issue in manufacturing, will continue to be. So if there's ways to perhaps do some things during this 8-week period or next quarter, certainly important. And then finally, some plant, office, and equipment projects. When you look at your facility, are things there that if you've got capacity, you can allocate people to that help with that plant, office, and equipment efficiency. So again, those are things that you've got the funds, you're going to pay people, they're on your payroll. So how can you look at, especially where you have capacity, ways in which you repurpose or use some talents that provide some value add during this 8-week time period? Okay, that ends the slides. And so I'm going to pull up the chat questions at the moment. I'm going to go back to the beginning, and where we can, we'll try to group these and such, but do please keep coming these through the chat portion. So one of the, I'd say, common questions.
And Robert just wanted to jump in. I still can't see him, so if you could. Yeah,
I'm going to read it, Morris. And then if Morris, I will read the questions, and then if it looks like it's one for you, I'll indicate and have you address. Okay?
Perfect.
All right, so this first one is coming your way, and I'm going to basically lump this together, but there's a number of questions about valid expenses as they relate to health insurance plans, whether it's an HRA plan, short-term disability, long-term disability, life insurance, dental. And so, in general, Morris, from an employment perspective on this, are the benefit plans that companies are paying for considered part of the calculation and forgivable portion?
Yes. Yeah, I mean, they talk about, the regulations talk about payment for the provision of employee benefits, consisting of group health care coverage and including insurance premiums and retirement. But that's, I think it's written for, I think really for the the general rule that what you've been paying and as benefits prior to receiving this loan would generally constitute benefits and payroll costs within the meaning of the loan now.
Yes, and I certainly would agree with that assessment. Next question I'll take here is one of, is payment of interest on existing loans an allowable use? And again, the time frame, if these loans are in place before February 15th, and while I would say it's not 100% guaranteed, I would say that it's pretty certain, meaning greater than 90%, that the interest on your existing loans is an allowable use, keeping in mind that 75%, 25% allocation, meaning that you want to make sure that 75% is going towards your payroll costs. To the extent you fall below that 75% for the payroll and benefit costs, that's where we're going to start getting into some of the non-forgivable calculations towards the end of at the end of your 8-week period. Morris, anything you want to add on that one?
No, I think that's, yeah, I agree. I think that's pretty clear that, that interest on the existing debts would be part of that 25% slice.
Mm-hmm. This next one is I think a good question as it relates to, if you don't spend all 75%, and maybe I'll modify this. So what happens if you don't spend 100% of the proceeds that you receive in this? Because you don't have the work or you haven't brought people back. So I think this is where I want to recommend that business decisions need to be first in line before you're making decisions necessarily on forgiveness or we'll say repayment type of things. So if, for example, you don't spend all your funds and then you've spent within the 75% payroll, 25% other, and you haven't used those unspent funds, what that means is then you've got that money available to pay back. There are no prepayment penalties. So if you've got unused funds, you could return them right away, or you could choose to return them over the deferral period, that 6-month deferral period for payments. And then you've got the 2 years at 1% interest, which is certainly inexpensive money. Where you get to a point, if you're calculating and find out that, hey, my utilities, my rent is taking up more than 25% of my payroll cost, or more than, in such of your 75-25 allocation, that's where I think you're going to want to have a conversation with your advisor on, are there things that you can do before the end of the pay period or before the end of June 30th, so that from a cash perspective, you can either get caught up to improve your forgiveness, or whether the business decisions are more important and you'll choose to have more non-forgivable portion of those funds. So that's why we're encouraging the record keeping on a weekly basis, so that you know where you're at and you don't have any surprises when you get to the end of that 8-week coverage period. Morris, any comments on that one?
I agree with you. I mean, I think everyone needs to keep top in mind, the best way to operate their business, and in general, hey, if you can get if you can get 100% loan forgiveness, great. If you have to make business decisions that are going to reduce the amount of forgiveness that you receive, then you have to do what's in the best interest of your company.
Mm-hmm. So another good one here, what about temp services? So if we're talking about payments that employers use to temp services, how do those play in terms of eligible expenses and forgiveness? Morris?
Yeah, I think that's a little bit of a uncertain at this point in time. I think there's a distinction. Obviously, if you're a member of a PEO, then you are officially the co-employer of your employees along with the PEO. If you use a staffing agency, then technically the staffing agency is the employer and you are not. My thought is that those costs are still payroll costs to you. Even though you are paying the staffing agency, that's a payroll cost to you. And I would think it would be covered, but I haven't seen guidance from the SBA precisely on that point yet.
Okay, so that's one I think, you know, to the extent you have that situation in temp agencies, make sure you're talking to your labor attorney or others, you know, on your specific situation. Next one, I'm going to go to the utility question. So what costs are considered utilities? And, you know, a definition of utilities would be great. So, you know, certainly I think everybody's familiar with your electric and gas. And, you know, I think certainly phone and internet today, to me, qualifies as part of your utilities. Morris, do you have others that you think would fall into the utility? Obviously water, sewer as
Right.
well.
I mean, yeah, I mean, I think it's safe to you interpret that per the general meaning of a utility. I haven't really thought of any other categories that might fall under that. Obviously, I'm sure that the folks listening might have their own ideas and have more insight into how their business operates. But that, my thought was, it's just what you would generally consider a utility payment.
There are two people who chimed in with suggestions on this one, potentially waste removal and garbage removal, and asking, is trash hauling a utility?
Yeah, I would say yes, but we don't have any guidance on that. But I would, Robert, what's your view?
Yeah, so in terms of those basic services for, we'll say, safety and operation of a facility, so, you know, you've got your heat, your air, your light, you know, trash certainly falls within that. We'll see if we can't get a more specific answer, but that right now is not specifically covered in the guidance.
Yeah.
There is a question on if we achieve complete forgiveness for the loan, is the accrued interest forgiven also? So in that case, depending on when, you know, you get your notification of complete forgiveness, which again, at this point, we think it's unlikely in many cases that people achieve 100% forgiveness. The interest portion of that is not likely to be forgiven. So, so in other words, that 1% that's there is something that you do want to keep track of. And at least at this point, my guess is there will be some accrued interest that may not be forgiven as part of these loans.
Yeah.
Good one here. 8-week timeline is when does it start, from when the funds are received or when the loan is written? Morris?
I think my view of the regs is when you get the funds, when the advance occurs.
And that's correct. Our understanding is that when that first disbursement of your PPP loan is made, that's when that 8-week time period kicks in. So if you've received the funds already, you're already in that 8-week time frame. If you've been approved but not received, your 8 weeks has not started yet. We talked type of proof to submitted for each expense. We talked a little bit about the certifications and that, so I think we've addressed that question. In terms of 25% reduction in salary and wages, does it exclude overtime from the prior year? So in other words, last year we were working 7 days a week. Now we're only working 5 days or 9 hours. Morris, you want to take a first stab at that one?
That's a good question. And I'm not sure we know the answer to it. My view of what's currently out there would be that the overtime is going to be included, because they're just going to be looking at what the wages actually were, which will include overtime. But I mean, hopefully we'll get more guidance from the SBA on that. But I think my fallback would be the overtime would be part of what's considered wages from that last full quarter.
Yeah. And this is where I go back to that macro versus micro comment that I made. So, certainly when you're looking at what was your, we'll say, trailing 12-month payroll, or, the 2019 payroll that you did for this calculation, moving forward, if you know that you've got substantially less in terms of this, then you're likely to have issues with what the percentage of forgiveness is. And so that's why I think keeping track and being aware of that with your advisors certainly would be important. Now, that said, I've had others ask me, so I've had people working, we've furloughed or laid off a number of people, but my people that have been here, I'm considering giving them an additional bonus during this time period and using these funds. Is that bonus allowed? Is that, eligible? Can it be forgiven? And that's where, too, I go back to the macro versus micro with the idea that if you paid that bonus within that 8-week period and it's compensation, that certainly counts towards your total payroll dollars that are being made and towards the forgiveness. So in other words, it's not looking to see which individual necessarily got the bonus, but there is kind of keeping in mind a total amount that you're paying in your payroll and sustaining throughout this 8-week period, along with your ability to bring people back toward the very end of this by June 30th as written into the legislation.
Right. Yeah.
Here is another one on headcount. If I have more employees now than I had in 2019, but one of the 2019 employees is not on payroll but on 1099, meaning a contractor, would I still be able to get 100% forgiveness, or do I have to bring the 1099 employee back on payroll?
Well, yeah, the 1099 employee is not going to count for purposes of this.
So I think the answer to that question is a yes. To get that 100% forgiveness, you'd want to not have them as 1099, but back as an employee.
Yep.
Here's a good one. I'll take this one. Can you prepay any expenses and or payroll? What about bonuses or raises? Can they be counted? So back to this cash basis, I'm going to say cash basis within reason. So if somebody's saying, I'm going to pay payroll for, my third quarter starting July 1, because I think I've got enough to do it, that may stretch the spirit or intent of the funds. But when you're talking about reasonable expenses of perhaps maybe some of your utilities and rent and things that are part of what we're calling eligible expenses, certainly within reason, making those cash payments during your 8-week period would put them in that eligible time frame. And again, please be careful with your 75-25 allocation between the payroll and other.
Yeah.
Next, we have 2 employees who already plan to retire, one April 1, one July 1. Will they end up counting against my head count? Morris?
Yeah, if you lose an employee, the way it reads now, they're going to compare your, whichever period of time that you choose, they're going to compare your head count from that time to your head count in the 8 weeks. So if you lose an employee due to retirement, that will affect, the loan forgiveness calculation. And I just wanted to add as well, because I got a question from one of my clients. He's like, well, which was, can I fire someone for cause? And the answer to that is also yes. But it will impact your calculation as well. But, with the assumption that you can, you'll hire a new employee to replace the retired employee and or the person that you had to let go for disciplinary reasons.
Mm-hmm. Okay, next to, we see a comment on the separate bank accounts. We see the healthcare premiums. I think we've addressed that. Next one was the 1099 contractors eligible for the 75% payroll. Again, you need to be careful there, but you are correct. The allowance really right now that we understand is to not include contractors on that 1099 side for your 75% payroll costs. Next question on employees that are furloughed. Anticipate bringing them back on or around May 1. Sounds like funds haven't been received yet, but may be received next week. Can, or maybe I'll change it to should, we leave our employees on unemployment and bring them back on May 1? Morris?
I'm not quite sure I understand. They're saying that they might bring them back. They might wait on bringing them back.
Yeah, I'll take this first. I think if I'm reading the intent of this, it's that, should we be aware of timing? If we have employees that are furloughed, laid off, and you're going to bring them back to pay them using funds that you received from the PPP, you do want to be aware of your 8-week time frame in terms of when you get the money. So, we do understand that once you've been approved, there's a 10-day period by which the bank is required for you to sign the documents and to be funded for that first disbursement. So the best you can time up the making your payroll, bringing people back in that 8-week cash payment period certainly makes sense in terms of trying to balance the timing of when you bring people back and the eligibility to use the funds. I think what you don't want to do is have the people coming back before you've received the funds, because then you potentially have some uncovered payroll as part of that time period.
No, now I understand what they're getting at. No, I agree with Robert. You got to time it up for when you get the money.
Okay, next question. Reduced hours due to actual work available. Slow right now. Paid everybody their full-time hours up until recently, trying to help even though don't have the work to support. Now it's no longer an option and is hurting the company. Terms of choices, in terms of what to go to in 3 days per week. So, that I think clearly is one where your business needs, you have to balance with those of trying to maintain payroll and so forth. So on that particular question or observation of if you have PPP funds, certainly make sure that you're using those funds in the 75-25, or if you're not using them at all, meaning that it's gone back, just be careful, I'd say, in terms of what you're considering would be forgiven and used versus what if you end up just not using them based on business decisions that you've got the money to be able to return relatively quickly or within the time period set by the loan agreement.
Yeah, and on those lines, I think Robert's advice to keep a separate account is a kind of a smart way to make sure you keep track of that. I mean, if you've got the PPP funds in a separate account and you're using that for payroll, using that per the 75-25, that makes it easier for you to track.
Yeah. So we're down to our last couple of questions here in the last couple of minutes. Can management be prepaid and still qualify for loan forgiveness? And I'm not sure if that means management fees or management, meaning in terms of management of the company. Again, it's macro versus micro there. Be aware of what I call related party issues as well on any payments. So like if part of your rent is to a related party, there are some issues there that you need to be aware of for forgiveness. Again, it's cash basis and spirit and intent, I think, is also going to be very important when you get to the end of that 8-week period and these are looking at what's the forgiveness amount.
Yeah, and I would just quickly add, obviously, if we're talking about salaries, then everything's excluded over 100,000.
Mm-hmm.
So when you talk about management and what their salaries are.
So, Rick, I know we're at 12:59. Did you want to try and open up for any other observations? I know that we see all the chat here. We can make sure these get addressed in terms of, we'll say, kind of a written response back to things. But did you want to have a brief time period for anyone to offer a verbal observation or thought they'd like to share with the group?
Yeah, I mean, I think if we could do that very quickly, if there's anyone on the call that, perhaps they're thinking about an idea to utilize this, keeping in line with the 75-25, maybe a new process or a project that they were putting off that they think they could probably do now. Yeah, I think if someone wants to share that with the group, that would be great. Feel free to turn your microphone on, and we can do that very, very quickly, though, just to be respectful of time. Okay, well, sounds like we got a shy group.
I got a question.
Sure.
Bob from Shoreline in Cleveland. For the payroll costs, what actually, does anybody have a spreadsheet or whatever that actually goes into the computation to decide how big a loan you can get from the bank?
Yes, that does exist in terms of kind of some general calculators that are out there. And now, this would be for round 2 since round 1 is done. But as far as trying to figure out, what's kind of your number, there are some calculators we can make sure that you have a link to for that.
Yeah, I mean,
Rick and Ann, if you.
Because I mean, you're talking, I mean, at least the way I read it, and I talked to my CPA about it, we're also talking about federal unemployment insurance and state unemployment insurance and a couple of other items to arrive at the total dollar that you could technically borrow. And I haven't seen anything that's super correct that would lead you to those answers.
Yeah, there are a number of different, and I don't know that any one can say their absolute truth based on the nuances that are there. But
all right,
yeah, I can get you a link.
I would appreciate that. The second question, or my guess, is this: they had under the criteria where you could get an advance of $10,000 towards the process, to which I received the $10,000, but I didn't receive a answer and or comment about the additional 150,000. Is that, if you got 10, are they going to give you the balance, or does anybody have a rough throw out there as to how long it takes after you get one of the first checks that you might get the second?
I'm going to pause if there's someone on the phone that has the actual experience, but our understanding of the issue there is that you got the 10,000. It doesn't mean that you can't still get PPP or others, but it's likely then that 10,000 gets rolled into your PPP.
Okay. Yeah, because I mean, obviously the total amount that you can borrow at 1% is a key factor to have the mathematics in place. That's all.
Right.
Yep.
And if you could send me the link on that, I'd send you a beer.
I'll have one for you. 4 o'clock today.
All right. Thank you.
Hey, Robert, I got a quick question. This is John Coco from Feedall. One of the things that's a little bit nebulous, and I see it in a couple of questions from the group, is how do you calculate average headcount? Is it the total headcount at the end of the period, or do they average the number of days? I'm not sure how to calculate average headcount.
Yeah, so here's maybe some guidance of this as far as items to think about and gather, and we'll see if we can't push this out as well. But in terms of headcount, you're looking at the pay periods for the 8-week time starting from your loan funding date. Okay, so that's one. The other time that you're looking at FTEs is from February 15th through June 30th. So having a number on that. Next one is an FTE from January 1, 2020 through February 29 of 2020. And these are all factors that we think are going to be used in calculating forgiveness. So in terms of the FTE side of this. Go ahead.
And my thought is that I'm assuming, we are all assuming at this point, but I'm guessing it's going to be the average of your head count for that period of time. So
Yes.
It's not going to be measuring from the last day. It's going to be, we're going to take that entire period of time, and then we're going to just average out how many, what your head count was.
Yeah, and that's where I'd say you're in good shape if your macro calculation looks to be at or above before you went into this, the COVID situation, where the negative would be as if on a macro level, the FTE seems to have decreased from the time, kind of this February 15th date into now.
Okay, can I just clarify what you guys said? So if I had headcount on the base period and it's changed, it may change every day through that months period. I just need to have what the headcount is per day and then take the average over those number of days. And I do that the same way with the 8-week period.
Yeah, I mean, I think that's a good rule of thumb based upon what we know now. That might change, with the next time SBA issues some specific guidance on this, obviously that might change it, but that's, as a rule of thumb, I think that's a good rule of thumb.
Okay, well, to respect everyone's time, it's now 1:06, so we're going to go ahead and wrap up the call. As Robert just said, we will try to get all of your questions addressed. We have your contact information from your registration, so we will go ahead and get these addressed for you and then push that information out to the group. I'd like to thank everyone for joining us on the call today, and thanks to Morris Hawk and Robert Shenton for sharing such valuable information and insight during these trying times. We encourage all of you to share with us your thoughts on topics you'd like to see covered in future calls, and we'll do our best to address those for you. Please stay tuned to your email as we announce our next call, and if there's other manufacturers in your network that you think would benefit from this information, please feel free to share this with them or let us know, and we'd be happy to reach out to help them. As I mentioned earlier, an archived version of this call will be available on our YouTube channel, as well as in the COVID-19 resources section on our website. Thanks again to our presenters. Thanks to all of you for your time today. Stay safe, and we look forward to seeing you soon. Goodbye, everyone.